In compliance with Section 7, Paragraph 2A of the Public Finance Management Act, the review provides details on economic developments during the first half of the year, progress on implementation of the 2020 national budget, and also makes proposals for the realignment of the macroeconomic and fiscal policies to the Transitional Stabilization Program objectives. As the Speaker said, the spirit of stakeholder cooperation and participation in policy and budget formulation and implementation processes keeps enhancing budget transparency and accountability. Zimbabwe has been ranked number 3 in Africa in terms of budget transparency by the Open Budget Survey, OBS, of 2019, with a budget index score of 49, up from 23, which was recorded in 2017. The country's ranking improvement reflects strides in increasing and timely availing of budget information to the general public and other stakeholders. From the beginning of 2020, the economy was confronted with a number of shocks from multiple fronts, with major ones being the following. 1, climate shocks in the form of the 2019-2020 drought and Cyclone Idai. 2, energy challenges. The power outages have been obvious to all. Number 3, currency volatility. And number 4, the outbreak of the COVID-19 pandemic. Besides the loss of life, the pandemic destabilized global economies through disruptions in trade, in tourism, in production, in productivity, in supply chains, and other various integration mechanisms. As a result, global GDP growth is expected to contract by about minus 4.9% in 2020, from minus 3%, which was earlier projected in April 2020. This is according to the IMF June Global Economic Outlook Update. While the most affected, Mr. Speaker, say, will be the most advanced countries, which will record a contraction of minus 8% in their combined GDP growth. In the outlook, as the pandemic gets managed and subsides, global output is expected to rebound with average growth projection of 5.4% in 2021. So we expect a rebound. With regards to the domestic economy, the impact of the pandemic is being transmitted through trade and tourism restrictions, low commodity demand and international commodity prices, disruption of the global supply chains, slowing down of global financial flows, including credit availability, remittances, and also portfolio investments. In the 2019-2020 first round crop and livestock assessment, there are indications that there is some reduction in hectarage for both grains and cash crops in response to declining prices and late onset of rainfall. As a result, revised crop output point to a mild agricultural growth contraction of minus 0.2% against the plus 5% growth that was originally anticipated. Let me say something about grains, Mr. Speaker. The 2020 second round crop and livestock assessment report indicates that grain production increased by 24% from 852,000 metric tons to 1,060,000 metric tons in 2020. Going forward, preparations for the 2021 summer season are underway, and this is guided by the Agricultural Recovery Plan, which prioritizes productivity through interventions centered on mechanization, irrigation, soil conditioning, extension services, and appropriate and timely financing. The mining sector, being the largest foreign currency earner, 60% of total foreign currency earned, is poised to surpass agriculture, which currently contributes between 9 to 10% to GDP. Currently, the mining sector contributes about 8% of total GDP, and has set a target of generating $12 billion revenues by year 2023, from as low as $2.7 billion in 2017. During the first quarter of 2020, PGMs, cluster, and diamonds registered strong performance compared to the same period in 2019, while gold, chrome, nickel performed slightly below expectations. Therefore, growth for the mining sector is now projected to slow down to minus 4.1% in 2020, reflecting the impact of the COVID-19 pandemic and other challenges revolving around foreign currency retentions, which we have since corrected. These include erratic power supply and loss of skills in the mining sector. I now turn to the manufacturing sector, Mr. Speaker, sir. The COVID-19 pandemic depressed the performance of the manufacturing industry by restricting production, distribution, and consumption of goods and services, among others. It also caused input supply disruptions in source markets. And here, it's really about China, which is the factor to the world in terms of supply of raw materials. So slowdown in China, or disruptions in China due to the pandemic, disrupted the global supply chain, and this impacted the manufacturing sector domestically and globally. However, government intervened through the stimulus package, which facilitated a $3.5 billion, this is Zimbabwe dollars, facility to cater for industry working capital. And this is split as follows: $3 billion for working capital for large companies, and then for SME support, $500 million, and this is expected to arrest a huge decline in the sector. As a result, the sector is expected to contract by minus 10.8% in 2020 against the 1.9% that was originally projected. Let me turn to the distribution, hotels, and tourism sector, Mr. Speaker, sir. The distribution industry, which constitutes output from wholesale and retail services, was not spared from the knock-on effects of the pandemic during the first half of 2020. Tourism, which has a higher weight, was particularly most affected by the COVID-19 pandemic through restricted travel, and indications are that the whole subsector will contract by a minus 7.4% in 2020. Transportation was affected by reduced economic activity on account of reduced cargo from mining, which is coal, chrome, black granite especially, and also from agriculture and manufacturing that affected airline, road, and rail activity. And it was also affected by fuel and foreign currency shortages. The most affected is the airline business, which has been virtually grounded during the lockdown period. This is the same story globally, Mr. Speaker, sir. In the road passenger transport, capacity was reduced to less than 50% in April 2020, before increasing slightly to about 70% currently. However, government continued to prioritize road rehabilitation programs under which the Harare Beitbridge road received $321 million, leading to much faster progress in the construction works. I'm also happy to report, Mr. Speaker, say that last week, Treasury released another $550 million for the completion of the targets on that road, the Harare Beitbridge road. The target is to achieve 200 kilometers by year end in terms of tarred road. In view of the impact of the COVID-19 pandemic on human lives and the economy, government came up with a number of preventative interventions, including a stimulus package of 18.2 billion Zimbabwe dollars, which is targeted at the productive sectors. Preventative measures targeted capacity for the health sector in terms of personnel, equipment, medicines, infrastructure, and other things, but also water and sanitation and social protection for vulnerable groups. On the other hand, the rescue package for productive sectors was designed to provide working capital for industry, tourism, agriculture, mining, SMEs, and other productive sectors. Additionally, the government extended fiscal and monetary policy relief measures, which include relaxation of import duty on selected raw materials, tax credits of up to 50%, and COVID-19 related expenditures, lower lending rates, as well as comprehensive reduction in statutory reserves requirements on banks to release more resources for lending. A word about development partner support, Mr. Speaker, sir. On the 2nd of April 2020, His Excellency the President, Comrade E.T. Mnangagwa, in conjunction with the United Nations, launched the domestic and international humanitarian appeal for assistance with a budget of $1.8 billion inclusive of 220 million, which was later revised to 300 million, just targeted at COVID-19 support. The request for support to mitigate COVID-19 pandemic is in line with government's national COVID-19 preparedness and response plan. In response to the appeal, development partners revised their humanitarian response plan to include requirements towards the COVID-19 pandemic. In addition, most development partners reallocated and committed fresh resources from ongoing projects towards strengthening Zimbabwe's health sector, public health sector response. Against government's request for $300 million, development partners have pledged $202.6 million, of which $26.9 million has already been disbursed. Starting with the revenues. Cumulative revenue collections for the period January to June 2020 are estimated at 34.2 billion Zimbabwe dollars against a target of $32.1 billion. This resulted in a positive variance of $2.14 billion, or 6.7% of projected revenues, notwithstanding the slowdown in economic activity that has been induced by the COVID-19 pandemic. Tax revenue continues to account for the bulk of the revenues, with collections amounting to 33.4 billion, or 97.6%, while non-tax revenue contributed 823 million, or only 2.4% of total revenue. I now turn to the votes performance, department by department, ministry by ministry, including Parliament, of course. Whilst there was an increase in expenditure for some heads, overall spending was largely contained within the target, as ministries, departments, agencies, Parliament redirected spending within the approved budget and in line with the government directive. I think there's a table there. Yep. What you'll see is that if you turn to column 1, 2, 3, 4, that we've only spent 46% of the budget so far, or 26.4 billion. This is excluding the other payments. And then we have got debt service ratio, the pension, public service pension scheme, transfers to provinces, and other statutory appropriations, and the total is 28.89 billion, which is basically 45% of the budget so far, and then we still have an outstanding similar amount, because it's very close to 50, but slightly less than 50 at the moment in terms of expenditure. As indicated in the table on the screen, as you can see, ministries have on average utilized 46% of their votes as of June 2020. This also implies that 54% of the regional 2020 budget remains unutilized as of now. This enables us to operate to the end of the year as we reallocate to cover the critical needs, especially those related to the COVID-19 pandemic and social protection. This position enables us to avoid tabling a supplementary budget or an appropriation bill given our current levels of spending. I now turn to social protection, basically protecting the vulnerable, Mr. Speaker. Mr. Speaker, during the period January to June, total social protection expenditure, and this is narrow expenditure, this is excluding the ministries that are in the social sector. This amounted to 902.2 million against targeted expenditure of 1.3 billion. The distribution of major expenditures among other social interventions were as follows. This is not all the details on there, but there's drought mitigation, for example, at 402.2 million, BEAM, or Basic Education Assistance Module, at 150 million, Sustainable Livelihoods Program at 67.3 million, support to disabled persons at 7.1 million, harmonized social cash transfers at 158.1 million, support to elderly persons at 3 billion, children in difficult circumstances received 5.1 million, health assistance at 11.9 million, COVID response at 85.5 million. This excludes support to the health ministry. It's really narrowly defined under the social protection ministry. Furthermore, 760,000 vulnerable food insecure households were supported with grain, across the 8 rural provinces. This is per month. During the first half, to bring the total expenditure on that was 404.2 million Zimbabwe dollars under the food deficit mitigation strategy. Let me add a footnote there, Mr. Speaker, said that we have extended this program to the urban areas for the first time in Zimbabwe in 40 years. So initially, we were providing food assistance in urban areas, and with the shortage of grain, we have now substituted that with cash transfers in lieu of cereal, and we have been transferring resources to needy citizens. And we continue to do so, and my request to members in this House is to keep supplying us with names of vulnerable households in the urban areas that we could add onto the cash transfer program in lieu of grain. The defined benefit pension scheme introduced by government in 2018 received an allocation of $70.4 million in 2019 as seed money, as seed capital. The cumulative pension contributions during the period January 2019 to June 2020 amounted to 759.5 million Zimbabwe dollars. As at 30 June 2020, the fund's assets, which are under asset managers and money market investments, stood at 768.3 million Zimbabwe dollars. Then let me mention that then if you add all this up, our budget balance is as follows for half of this year. Resultantly, for the period January to June 2020, a budget surplus of about 800 million Zimbabwe dollars has been realized for this first half of the year. Mr. Speaker, I now turn to exchange rate developments. Exchange rate levels and movements have far-reaching implications for inflation, competitiveness of exports, efficiency in resource allocation, international confidence, and balance of payments equilibrium. Therefore, exchange rate developments are a matter of national interest and concern to government, in the business community, and the general public. In order to stabilize the exchange rate and anchor inflation, government introduced the foreign exchange Dutch auction system on Tuesday, 23rd of June 2020, which is designed to reduce exchange rate instability. The auction is expected to enhance transparency in the management of foreign exchange, achieve a realistic exchange rate for the Zimbabwe dollar, and discourage speculative demand for foreign currency. We expect it to really improve the price discovery process, Mr. Speaker. On inflation, Mr. Speaker, inflationary pressures which subsided in the last quarter of 2019 and in January 2020 resurged from February 2020 to June 2020. However, inflation is expected to gradually decline in the second half of 2020 from the peak of 785.5% in May 2020 to 300% in December 2020, responding to current monetary and fiscal policy intervention. The projected annual inflation is consistent with reducing the month-on-month inflation from around 31.7% in June 2020 to about 5% in the last quarter of 2020. That's our projection. Mr. Speaker, I now turn to the National Development Strategy. Government has embarked on the formulation of the National Development Strategy for the years 2021 to year 2025, which is the first of the two medium-term development plans guiding the country's development trajectory towards Vision 2030. The strategy has the following indicative national priorities: economic growth and stability, food security and nutrition, transport infrastructure and utilities, governance, that's the first column, industrialization through value chains, housing delivery, health and well-being, human capital development on the second column, and then environment protection, climate resilience, and natural resource management, image building and international re-engagement, devolution, social protection on the third column. Then on the final column on the screen, there's digital economy, youth and culture. So these are the indicative and initial national priorities of the NDS, the National Development Strategy. Mr. Speaker, sir, I now turn to revenue measures. As I've already alluded to, in terms of severity of the COVID-19 pandemic and its consequences on the macroeconomic environment, I hereby propose the following measures. We are faced with a huge task to perform a balancing act that provides support to industry, avails taxpayers the necessary relief to enhance disposable income, to promote capital accumulation, which is crucial in supporting the economic rebound, and also protect revenue sources. Let me turn to industry support. This is a customs duty exemption on top-dressing fertilizer. In order to close the gap in supply of top-dressing fertilizer, I propose to ring-fence 120,000 metric tons of fertilizer under duty-free exemption for approved manufacturing companies for the 2020-2021 summer cropping season. I now turn to PAYE tax-free thresholds. This is to support our citizens and also reduce the tax burden, but also increase demand. In a sense, it's almost like a demand-side stimulus. Mr. Speaker, sir, in an effort to cushion employees from bracket creep, whereby previously untaxed employees become liable to tax due to inflation-induced wage and salary adjustments, I propose to review the tax-free threshold from 2,000 Zimbabwe dollars to 5,000 Zimbabwe dollars per month. I further propose to adjust the tax bands to begin at 5,001 Zimbabwe dollars and end at 100,000 Zimbabwe dollars, above which the highest marginal rate, 40%, will apply, and this is with effect from 1 August 2020. Let me turn to the tax exemption on the risk allowance and by our frontline health personnel, Mr. Speaker, sir. In line with the undertaking already made by His Excellency the President to reward the selfless commitment exhibited by public sector frontline health personnel, I propose to exempt from tax COVID-19 risk allowances payable to this category of employees for a period of 12 months, commencing from the 1st of April 2020. Let me turn to the incentives for the Victoria Falls Securities Exchange and for investors, and I've already mentioned something about the Victoria Falls Securities Exchange. Honourable members will be aware of government's plan to launch the Victoria Falls Securities Exchange with a view to attract critical offshore capital to the economy. The primary objective of the Victoria Falls Securities Exchange will be established, is that it will be established within the Victoria Falls Special Economic Zone, and it is designed to mobilize foreign currency denominated portfolio investments and other investments. As part of the incentive package to facilitate establishment and full operationalization of the exchange, I propose the following incentives for the exchange. 1, exemption from corporate income tax for the Victoria Falls Securities Exchange. 2, exemption from capital gains withholding tax on disposal of shares listed on the Victoria Falls Securities Exchange. And finally, a lower rate of 5% on dividends payable to non-resident investors on the Victoria Falls Stock Exchange. I now turn to the allowable deductions on health-related donations. Since the first reported local case of COVID-19 pandemic, a number of corporates have donated they've demonstrated a lot of goodwill and sacrifice by donating various goods and services to strengthen the health delivery system and social support framework. I therefore propose, Mr. Speaker, sir, to review the maximum allowable deduction on donations by corporates to the local currency equivalent of $100,000 US dollars. I turn to tax exemption on university infrastructure projects. Mr. Speaker, sir, tertiary institutions continue to grapple with inadequate on-campus student accommodation. In order to support university infrastructure development initiatives by the IDBZ, the Infrastructure Development Bank of Zimbabwe, I propose to exempt from income tax specified student accommodation projects. This is with effect from 1 January 2021. The exemption will be granted subject to fulfilling prescribed conditions. Let me turn to measures for revenue enhancement, Mr. Speaker, sir, starting with the payment of IMTT on foreign currency transactions. Current legislation exempts the transfer of money into and from nostro foreign currency accounts from intermediated money transfer tax. I propose to extend the intermediated money transfer tax to cover foreign currency transactions. For the avoidance of doubt, transactions conducted by organizations accredited in terms of the Privileges and Immunities Act, Chapter 3, Section 3, remain exempt from IMTT. Let me say something about thresholds. In line with the market conditions, I propose to review the intermediated money transfer tax free tax thresholds for local currency transactions from $100 to $300. In addition, I propose to exempt from tax foreign currency transactions not exceeding $5 US. I further propose to review the maximum tax payable per transaction by corporates from 25,000 Zimbabwe dollars to 50,000 Zimbabwe dollars on transactions with values exceeding 2.5 million Zimbabwe dollars. I also propose a maximum tax of 2,000 US dollars for foreign currency transactions with a value exceeding 100,000 US dollars. Let me turn to the value-added tax recording on electronic transactions. Mr. Speaker, sir, whereas government has authorized use of foreign currency on the local market, current legislation does not require VAT-registered operators to produce customer sales receipts reflecting the currency of trade. There is a risk of understating revenue, especially where foreign currency transactions are reported in local currency. In order to mitigate risk on fiscal revenue, as well as enhance transparency, I propose to compel VAT-registered operators to configure fiscal devices to capture all transactions in the currency of trade and also produce the respective invoice in the tendered currency. Let me talk of duty exemption on donations of vehicles to government by development partners. I propose to exempt the customs duty donated single and double cab trucks in support of approved projects undertaken by government ministries and departments. On tax administration and border enhancement, honorable members will be aware that Zimbabwe remains a major transit route for both north and south bound traffic. During the past 3 months, traffic volumes have increased from an average of 500 to 1,000 commercial trucks per day. The surge in traffic volumes has created opportunities for smuggling of goods. In order to curtail smuggling activities, I propose that the Zimbabwe Revenue Authority, ZIMRA, be empowered to introduce anti-smuggling surveillance drones at both designated and undesignated entry points. Let me turn to excise duty on fuel. Mr. Speaker, sir, excise duty on fuel sold in local currency is currently pegged at a specific rate of $17.20 and then $14.30 for petrol and diesel, respectively. In order to create a balance between optimal revenue collection and affordability of fuel, I propose to introduce an automatic excise duty adjustment mechanism that reviews excise duty on a monthly basis to levels determined through a designated formula. This will be effect from 1 August 2020. The details of the formula are in the formal long document on revenue measures, which will be distributed to members and yourself, and is already be distributed to yourself, Mr. Speaker, sir. In conclusion, Mr. Speaker, sir, the recovery and prospective growth of our economy following the devastating consequences of the COVID-19 pandemic requires government intervention to restore the viability of businesses and also boost taxpayer incomes. It is therefore essential that taxpayers take advantage of the existing and proposed incentives, mindful of the reporting requirements that should be adhered to in order to enhance transparency and accountability in utilization. Finally, Mr. Speaker, sir, the realization of national aspirations through implementation of government programs and projects depends to a large extent on domestic revenue generation. Hence, voluntary compliance should be a virtue for every citizen. This is a win-win situation for both government and taxpayers as we collectively build and develop our nation.